I'm so sorry. Oh my God, this is
No, I'm
embarrassing.
kidding.
No. Hi, everyone, and welcome to the 21st episode of the VC React podcast. Every week, we break down startup news, VC moves, and investment stories with some of the sharpest minds in the business. Let's jump right in with Ian Arden, co-founder and GP at Mempool Ventures, Latifa BaNasr, founding principal at Sharaka Financial, and Philip Bahoshy, founder and CEO at MAGNiTT. And as always, from FWDstart, my co-host Jamie Lane. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Welcome to the show for the first time, Ian, Latifa, and Philip.
Thank you for having us.
Hello.
Thanks for having us.
Well, this is a special episode for us. It's the first after our New Year's break. We have the news roundup, we have MAGNiTT's 2024 VC activity report, and we have VC predictions for 2025 collected by FWDstart. Before we get into all of that, let me tell you about the first sponsor for this episode. This episode is brought to you by HR Clinic, Operational Solutions and HR Outsourcing. HR Clinic is your best fractional HR partner. They manage everything for your startup, including HR and payroll administration, recruitment and staffing, employee benefits, training and development, compliance and legal support, HR technology, and HR consulting. It's everything you would ever need to manage human capital at your startup. And guess what? All that for only $500 a month. No full-time employee can do all that, but they can. It's a limited time offer, so go spam the founder now at hishamaltahir@gmail.com. And now let's kick it off with Jamie. What did we miss over the past 4 weeks, Jamie?
Yeah, very, very little. Two regional tech IPOs, a
I doubt
couple of,
that.
a couple of large growth stage funding rounds, a couple of fund launches. So yeah, not a whole pile. Where would you like to start? I think maybe on the
IPOs, please, IPOs, yes.
Yeah, maybe possibly a good place to start. So we took a break. I think it was just on the precipice of Talabat's public float on the DFM. Obviously much hyped, a lot of anticipation surrounding it, and obviously the largest global tech IPO of 2024 as well. So raised around 2 billion in an oversubscribed offering, and then I suppose disappointed initially. It had that 6.9% share drop on the first day, and many I think were sort of rather hasty, I guess, to suggest that it had been overpriced. It did list at the top of the share price offering at 1.6 dirham, but since then it has rebranded. At the last time that I checked, I think it was 1.63. That was yesterday morning, Wednesday the 15th, and it's now marked as a strong buy by analysts pretty much across the board as well. So I think that provided a lot of encouragement. And then we also had a nice one, the beauty e-commerce marketplace, which listed on the Saudi exchange, the Tawdrul, last week, which was a very impressive listing, surged 30% on the first trading day. And I think all the more remarkable really is that the founders, brothers Omar and Abdul Rahman, they retained over 74% ownership after selling 22%. So I think, estimated net worth after that is encroaching on the billion mark, about $950 million. So very many congratulations to them, and I think provides a lot of encouragement heading into 2025, obviously. For a lot of startups who I think it's a pretty open secret, are looking to list, especially in Saudi, and especially I suppose for those marketplaces, e-commerce marketplaces especially, I think it'll provide a lot of encouragement. So that's public market. On the funding, a couple of big funding rounds. I suppose the pick of the bunch, and maybe it's pick the bunch because I'm a loyal customer as well, is Callow. They raised a 25 million and an oversubscribed Series B that was led by New Capital. That's also been extended to 50 million. So that initial 25 million extension is planned for Q1 of this year. Insider suggests that this is valued the company at 250 million. Some bold plans. It suggests they didn't necessarily actually need to raise this particular round, but they're looking at GCC expansion, retail entry, They have a UK acquisition lined up as well for Q1, which is pretty exciting. And in a sort of emergent trend of startups raising growth stage funding at this stage, they're sort of nailing their colors to the mast as to when they're going to IPO in Saudi. So they've claimed it's going to be 2027. I don't know if we're going to continue seeing this, but they're really sort of earmarking when the sort of liquidity event is going to happen for prospective growth stage backers. We had a massive seed round as well, Credible X, 55 million even. Their solution is on the SME lending side of things. That was led by Further Ventures. They have a $220 million fund located in Abu Dhabi. That included obviously debt financing as well for Kilgore Williams Capital. And then the last of them that I mentioned then as well is Zenshin Technologies. So they raised a $30 million Series A to start the year off on the right footing. So that's to expand its warranty and buyback services for electronics, led by Wide Ventures in Saudi, but also the participation as well of Japanese Sumitomo Corporation, as well as Global Ventures, who had backed previous rounds. And I guess the participation again of external international investors is good to see. And I'm sure Philip, you'll have more to say about that in terms of the 2024 side of things, where obviously saw a big increase as far as that's concerned, which is super encouraging. So
Okay, Jamie, let's
take a break. There's a lot to get through. There's a lot to get through.
There's a lot to unwrap here. The IPOs, I think there's a list published by Arzam VC that has 15 or 20 potential IPOs. Of that, we saw only maybe 2 listed last month and this month. Is there an IPO wave coming our way in MENA? Do you think more tech IPOs are happening this year and next year? What do you think?
Look, I mean, I'm happy to jump in so much as I've been part of several roundtable discussions with government entities, with regulators to have this discussion. I came from a view that it was becoming a little bit of an obsession that governments had around what is it to drive a healthy economy. But now I've kind of spoken to different type of protagonists, whether investors, founders, and regulators, to try and understand what the obsession is about. I think at its core, one of the biggest challenges is that we have not seen as much liquidity events taking place. In fact, less than 6.5% of all companies that have raised funds here in the MENA region over the last 10 years have actually exited. And traditionally in the region, that has come through M&A acquisitions, whether it's international players or consolidation. And I can't even speak to the quality of some of those M&As because obviously in the last couple of years, there's been a lot of acqui-hires. So in those conversations, you start to realize that on the venture side, the venture investors, they want those liquidity events, having had 7, 8, 9, 10 years of investing with limited returns on their investments. The challenge is it about the IPO or is it a lack of late stage funding to get companies to get to a position where they can actually IPO? What I did manage to do, and I'll kind of end that and obviously share the floor, is I did hear a term which actually resonated with me a lot more than whether there's a prediction of 15 IPOs. It seems that there are, as you said, 30 companies plus at Series B plus that are going through an exercise to be IPO ready. And I really like that because effectively you need to go through a restructuring of your corporate entity, whether it's auditing, whether it's succession planning, whether it's financials, whether it's growth expansion, etc. In that exercise of becoming IPO ready, you may be in a stronger position to potentially raise late stage funding than you would have been if you didn't. And therefore, by going through the process of getting to IPO ready, you may find an acquirer and or investment, but the goal is to work towards a potential IPO. So to the point that Jamie was saying, a lot of people are kind of coining a point in the future and backward engineering it because it allows them to kind of articulate that to their team, their investors, and the market to say, look, that's the goal. So we're going through the process of due diligence restructuring. Our goal is very clear and stated. If you want to join that journey and you want to be a late stage investor, here's part of the process. So will we see more IPOs in 2025? We made a prediction that we'll probably see close to 5 IPOs in the region. But globally as well, just to close out, we've seen a slowdown in IPOs and the proceeds of IPOs. So it's not that globally we're seeing this acceleration of IPO activity, but I do think that the subject matter has come into contention a lot more in the last 2 to 3 years because of the lack of late stage funding and liquidity for investors.
Latifa, what do you think? Everyone is looking at Saudi for IPOs
Yeah,
this year.
exactly echoing what Philip had just said. I think it's part of it is signaling to the market different characters and personas in the market, be it our LPs who wants to see some tangibility, and hearing more of IPO readiness being exercised, sort of give comfort and some sort of a cushion for LPs who are sort of the majority of the funds that we have. I wouldn't say the majority, maybe half the funds that we have are first-time fund managers. They're still raising their second, or they just closed their second. I think we only have a few that are on their third or fourth fund. And the asset class itself is still emerging in a way. It's gaining some maturity. And I think IPO readiness or having companies that are listed is attributing to that. But also there's a huge part attributed to the funding gap that we have that Philip has mentioned. And I believe my colleagues at STV have published actually a full-on report last year on how huge that funding gap for late stage and growth stage founders and companies that sort of pushes and puts the founders in a seat where they have sometimes to be or to accelerate their path to IPO just to get access to that liquidity. But on the other side, and the flip side of it is there's also a governmental push on that. And it started back in 2019, I want to say, when the Capital Market Authority actually launched and pushed for the parallel market, which is NUMO, where you see smaller companies getting access to smaller or more limited liquidity pool, and that sort of to accelerate the listing of tech companies, where JA has listed before heading to Tadawul, and now you see a nice one being listed directly to Tadawul. And that sort of prompts, and you see the activity of Tadawul, even the accelerated rate of companies that are being listed, not only tech, but beyond tech. So there's that huge government push and ease for it and the support for it. And there's a sort of move to support it from an infrastructure point of view. As Philip said, there is a lot of work to be done on the structure itself, be it on the holding co, the investors, etc., taxation and all of that. And I think there's a lot of work to be done, but also a lot of work that is already done. Would we see 15 companies? I'm not sure about that figure. I think I'm an optimistic person, but I think that's too optimistic, but I'm happy to be corrected, right? It's happy news for all of us if it happens, right? But I think we're going to see more capital efficiencies in the thinking of entrepreneurs and founders. And I think we're going to see, hopefully, a more optimized capital allocation from an investor perspective. And hopefully more, I'm hoping that we'd see even more growth in the fundraising in the growth market, because you need that pre or post Series B funding.
We have more news on the capital allocations and what SVC is doing right now and how many funds they're investing in with Jamie in a little bit. But Ian, what do you think about the tech IPOs in Dubai, Riyadh, and the region in general?
First of all, I love them. Secondly, my observation about the region is that, well, of course, we will agree the VC infrastructure in the region is immature compared to, for example, US. Like US had the tradition of investing in venture capital since like 1980s, right? And like the whole populations of families and other allocators have made their returns throughout the 10-year cycles. And who in the region out of the families is so comfortable locking up their capital for 10 years and you know, seeing the exit over a 10-year period? It's definitely like the culture that is evolving, but it has a way to go. And this lack of like VC infrastructure is definitely creating issues for like early stage startups. So what I would love to see is probably like more democratic and flexible regulatory frameworks for the liquidity for the startups, because that could be the way for them to go. If, for example, even like Series C would not be available for them, they could go liquid, and more of the population that way could actually get access to the earlier stage startups that generate more returns statistically, because we all know that IPOs, they are like, this is the stage that gives you of course the most security on your investment, but also like the least potential increase in capital. So definitely see this as a way for GCC to be different and their own kind of startup path, if you will.
Let me ask about the second piece of news that Jamie mentioned. There has been big rounds, especially in seed. We have a 55 million seed round. I don't know, Philip, how do you define a seed round? Is it by the amount or by the revenue or by the product status? I mean, a $55 million seed round. Would this, ruin the statistics that you create in your reports?
Yeah, I mean, it's a great question. So for any of our paid clients that get access to the paid reports, you'll see that we actually define stages either by stage and or by ticket size. So we actually remove the skew of the stage and we put 0 to 1 million, 1 million to 5 million, 5 million, 20 million, 20 million plus. And 50% of all MENA investments last year were between $1 and $5 million. So that was effectively seed. Now, the challenge, and it's not just us, it's any global data platform as well as us, is it really 55? I mean, the reality is that a 55 million seed round is completely out of skew of anything that we have. And historically, we have seen that rounds like that tend to be a venture debt plus investment round. Secondaries, I mean, at seed, it's difficult to see that there's too many secondaries, but secondary investments are incorporated as part of that seed round. Not to say that it can't be a big seed round. And there is a lot of nomenclature on the public domain and literature talking about whether they should change it into first round, second round, third round, fourth round. People love terminologies and tags. But to answer the question without going into the detail of the actual round itself, I can't tell you that, but that's what the team at MAGNiTT does. They will reach out to the investors and say, how much of that is actual fresh capital? Can you verify and confirm that? Is it venture debt plus equity? If it is actually a round that is at seed, great, it's a seed round, but what is it that's driven that at such a large amount and what's the valuation? But it is a challenge for the industry because there's no real benchmarks for that. And you have to kind of remove some anomalies when you're putting averages or medians.
Latifa, how do you define seed versus pre-seed versus Series A? Is there a criteria you have in your own firm?
So for us, the way we look at it is by the maturity of the product market fit part, right? At least internally, this is how we look at it. We do look at the ticket size per se, but also I think the main parameter for us is the product market fit and the maturity of that and the progression that is made. As Philip mentioned, I think it's becoming very, very tricky, especially for companies operating in the fintech and where they need venture debt or they have some elements of venture debt, etc. That component, to sort of distinguish that component on a general news announcement is quite confusing and it creates some distortion. So we're lucky to have companies like MAGNiTT to help us with that. But internally, the way we look at it is typically how much actually the product has reached and the company has reached product market fit. And in fact, a few days ago, we had this conversation with a founder who's raising a seed fund on a sort of pre-seed traction. And yes, terminology sort of creates some distortion, but this also reflects on the thinking sometimes of the investors and the founders on what they think is a value to be created and what's the actual value that is on table and sort of the milestone that the company needs to take and the leap that the company needs to take to reach to that stage that they're naming themselves at.
Ian, you say that you're a $0 to $100 million investor. How do you manage that? How do you navigate the stages of these companies? And how do you decide how much money to give any company? Is it based on their product, achievements, traction?
Yep, of course, everything. But first of all, I'd love to comment about the news itself. I would say whatever happens in Abu Dhabi in terms of the venture capital has to be treated with the caveats of like we don't know too much about those deals and their motivation and what what side deals or side letters they have in relation to that. So I'm pretty confident that further ventures know what they are doing, but we don't know why they are doing this, right? So it definitely like skews the statistics, and it gets a lot of people who don't know the region to get overexcited about the funding ecosystem here. They, many people have been excited with some of the similar announcements in the past because they are thinking, oh, it's so easy to raise the largest seed round here in UAE. Let's come to UAE and just fundraise for our startup. So I would discourage people from really following that thinking. Of course, us as a venture capital firm, like we want to maximize our returns, and we do this by really working like very closely with the founders in terms of the value add, and alongside with capital, like giving them the support that they need to get to the next level.
Makes sense. Okay, now let's move on to the next segment where I want Philip to take over now. Philip, you're a fascinating storyteller. You always say there is a story behind every number, and you always tell that story well, regardless of how high or low that number is. Can you tell us the numbers of 2024? Just a recap of the VC activity in 2024. I know you issue a report every year for that. And tell us the stories behind them. I'll give you, of course, extra credits if you have any rumors or gossips, if you have any.
I don't operate with rumors and gossip, so I'm the wrong
Okay.
person to come to for that. Look, I don't want to take too much time. Effectively, you saw 1.8 billion, and I'll keep it specific to MENA, invested across the MENA landscape across 571 deals. So if you look at the headline figure, it's a 29% drop in funding year on year. And I think it's to the point of the seed. There is a big obsession globally. And again, it's not to say that this is MENA related. Every geography likes to overinflate numbers and the headlines and clickbaitiness. We live in a social media environment where people like to get the headline and then actually dig down into the details. So actually in the last 2 weeks, all the press people that I've been speaking to doing interviews, whether it's in press and on video, kind of said, look, yes, it's down, but that does not mean that it's bad. And there's a difference. You really need to understand the story as to why is it down? And the very short summary, and I did a podcast with Lulu, sorry to plug her, but I spent 20 minutes talking about this subject, and I did my webinar yesterday.
I watched that episode. I love it.
Yeah, so we talked extensively, and I just did my webinar yesterday, is that you need to understand the global context. And obviously interest rate environments, post-COVID, a liquidity boom that you saw in 2021 and 2022, we're coming off the back of that in terms of venture. And I remember that I've been doing MAGNiTT more or less since 2015 and 16 in terms of reports. We were so used to a top right record year, record year, record year, record year. And the second that starts going down, people start questioning the data. And in reality, it's nothing to do with the data. It's just the market is evolving and changing. So we've seen 2 successive years of declining venture capital investment. And something that like I need to explain to people, although I'm sure you guys all get it, a top line figure of 1.8 billion, you can have $200, $100 million investments, but it's not going to really change the top line figure. It's going to come from how many mega deals or big late stage investments are driving that figure. So what's extremely noticeable this year compared to last year there was 1.1 billion, and even that was many deals that were delayed compared to 2022 in mega deal investments greater than $100 million. Last year, it was 388. And so late stage funding, as per the SDB report and why there's a lack of late stage funding and the obsession with IPOs, has been a segment that's been the biggest impacted globally, given the interest rate environment that we're in, the liquidity slowdown, the opportunities that exist. We've had 2 years of record public markets. We've seen interest rates extremely favorable. Real estate is booming left, right, and center. So that late stage, which tends to be, and the investors can speak to this much better than I, when you can't see where the next investment round is going to come from and or an exit or an IPO, you basically become more risk averse. What we did see though, is the early stage investment grew. As I mentioned earlier, close to 50% of all transactions were between $1 and $5 million. Where there is fresh powder, investors have tended to go to earlier stage because, of course, your exit window is now 7 to 8 years away. Valuations have kind of normalized, if not improved. Founders have an extremely frugal mindset now compared to where they were in 2021. And actually in the MENA region, compared to Africa and Southeast Asia, which we cover, we saw that MENA was the only geography to see an increase in the total number of transactions. So deal flow has remained solid, even though globally, according to international publications, you've had almost 9 quarters of declining deal flow, here in the region, it has picked up. And that can be definitely attributed to kind of the efforts of your SVCs, your DFDFs, your Mubadalas, your Jaddas, stimulating the economy. It's just not going to later stage investment to drive that top line figure. And I think that is at least healthy for the underlying ecosystem. And the final point, which Jamie was alluding to, and we can discuss later, we also saw more investors, close to a 20% increase in the number of investors investing in the MENA region compared to last year. So at least the appetite for investment, and again, we don't need to go into geopolitics and all of the challenges of the region in 2024, but despite all of that, we did see an increase in the participation of investors and early stage investment. So not a great year as a headline figure, but underlying that, lots of positives, as we have predicted that 2025 is likely to be a stronger year, albeit we're not going to see a hockey stick as we saw in 2021 and 2022. We just saw in global and US data a percentage uptick of about 10% in funding, again, driven by late stage investment. So we are seeing signs of a recovery, but it's likely to be another 2 years before we start seeing an accelerated growth. But a lot of that is positive for people in the region and from outside the region.
I think it makes complete sense, especially that there are a wave of corrections globally in the valuations of late stage or growth stage companies, right? And we've seen some investors shying away from investing in those big names because of that valuation correction wave. And they're focusing more on earlier stage. Ian, Latifa, any comments on what Philip just mentioned, the activities over the past year?
Yeah, just to reiterate what Philip has said, and I mentioned earlier, it's yes, there is that gap in the late stage, but also I think it's a mentality of capital allocation for LPs, right? From a return profile perspective, if I put my money now, when can I exit? So that clarity of exit horizon and what sort of cash on cash multiple or IRR that I am expecting. And on top of that, it's the mentality of the founders that shifted into more capital efficiency, etc. And even in the fundraising news for funds, you'd see that the majority of the funds that actually closed faster with different backers are actually early stage funds or smaller funds in comparison to late stage. So that's in general. And I think, as Philip mentioned, it's not about the headline figure, and it's never been about the headline figure. I think we all know that, but it's being now signaled to other markets and the wider market and people that you need to look deeper into that number and what does it say and communicate. So does that mean that we need more creative pools of money, be it venture debt or others, to support the growth of late stage? Or do we need to truly put a heavy and hefty efforts into accelerating IPOs, etc.? So which way is the most efficient and I would say founder-friendly way and wouldn't exhaust the founder? That's something that definitely the ecosystem has to think about.
Ian, any comments on the numbers?
Yeah, we'll probably just have to say that the recent what's been happening with the VC ecosystem in the recent years have basically made it healthier in my point of view, and made a lot of founders as well as VCs to actually take a healthier, more pragmatic approach. It also reflects to how we look at startups right now, where we basically recommend them to find the product market fit sooner rather than later. And I think that's the key mistake that the startups have been making traditionally. The whole mentality of 2010s has been let's build and burn more cash and raise more money without showing any revenues. And it has definitely shifted towards what are your unit economics and your revenue metrics right now. Even if you are raising pre-seed or very first round, you're already able to show the market traction, and from there grow the healthy company that if will not be VC funded in the future due to the VC market conditions, can go to PE route or go to acquisitions.com or get exited any other way, because it's just a healthy company by itself.
Jamie, we mentioned there are new funds that have been funded over the past few weeks. Can you tell us where those funds are? And then maybe we can comment on the VC industry itself, not the startups. How big is the VC industry in the MENA region? And how is it growing in the next few years?
Yeah, exactly. So look, we've a couple of different funds. Iliad Partners, they launched a $50 million Tech Ventures Fund 1 back in December. So that's targeting early stage B2B fintech, logistics and prop tech startups. So it's backed by Jeddah Fund of Funds, the Alain family, and Mazara Investment Company as well with the backers there. Just this week as well, we had a global Web3 early stage venture asset manager, Sigma Capital. They've launched a $100 million fund, again, looking at the Web3 side of things. 100 unicorns. They're India's largest early stage accelerator in VC. They just launched a $200 million fund, and they're also opening an office in Abu Dhabi as well. So they're going to be introducing their accelerator here, I believe, in the near future. And as well as that, then we had Sanibel accelerator by Orbit. So that's obviously backed by PIF-owned Sanibel Investments. So they've launched a new 4-month accelerator as well with the $100K dollars initial funding. Again, pretty agnostic, fintech, healthcare, e-commerce, mobility, and logistics being the primary focus areas.
There's also Global Ventures Fund 3, Pride Ventures Fund 3,
Of course.
MEDP Fund 4, Jadwa Investments Fund 1, Aleph Fund 1. There's a lot of ones I hear, but I'm happy to see 4 and 3 in the MENA region.
Yeah, and I think that the fund size as well, I think is particularly noteworthy. So obviously SVC incredibly busy in December in terms of getting those announcements out there and deploying that capital. But yeah, definitely, I mean, $150 million funds for Global Ventures and MEVP and for Aid Ventures as well. So ambitious targets, obviously still, I guess, primarily on the early stage side of things, extended somewhat into the, I guess, for the MENA region growth stage, I think you can, categorize as Series A and Series B to a certain extent as well. So yeah, it's exciting.
Yeah, Philip, you see other emerging markets, not just MENA, and all markets have ups and downs, right? Do you think this growth in the venture ecosystem or the venture size in MENA is sustainable? And the normal life cycles of markets, are we going to see a down market for venture investment from LPs?
I mean, look, a couple of comments. One, I want to just caveat everything that Jamie said, and this is a problem that we have whenever we're trying to look at these announcements. I'm not questioning any of the ones that he's just mentioned, but the devil's in the detail. It's very difficult sometimes to know what is an actual fund announcement, what is a PR release because they're closing a round and still need to go and get additional LPs. Is that capital available for capital call, or is that actually a positioning of what the size of the fund is? And so there is a lot of these announcements, and we try to kind of verify that. And we just literally released our investor ranking where we listed all the fund announcements that have been made, but we caveat that by saying we're not actually sure whether that's dry powder. And I think that's something that is always a little bit of a challenge here in the region, is actually getting accurate transparency. I mean, MAGNiTT exists out of the fact that it's very opaque and there isn't this information because there's no regulatory body to be able to capture this information. So I think that one of the caveats there is that it is extremely positive whenever you're hearing these announcements, but how much of that is actually available to make investments? And more importantly, which is why I think we're seeing some of the data, the pickup of investment in total number of deals, is that it then takes 6 to 9 months for that actually to get deployed. It doesn't mean that that is deployed immediately. So I think it's positive for next year, this year and next. Is there appetite? I think one thing that is absolutely clear is that the sovereign entities have played a massive role in supporting specific geographies, whether it is Saudi Arabia, the UAE, Qatar now, which has their 1 billion fund of funds, which is actively looking to try and deploy into different VCs. One of the beauties that I enjoy from MAGNiTT is that now we're covering Southeast Asia. There's a lot of learning lessons that can come from Southeast Asia for the MENA region. It's all good looking at the US and Europe, but the reality is they're not really comparable to what's happening in the Middle East. Southeast Asia, for all intents and purposes, Singapore is your UAE as a central hub, as a smaller economy, but a vibrant expat community where actually a lot of the tech investments are taking place. Temasek and GIC, which are literally always ranked in 2 of the top 5 to 10 sovereign wealth funds globally, have been the biggest stimulants of what has been happening in Southeast Asia. And again, when you look at what it characterizes the traditional LPs In the US, you've got endowment funds, you've got large corporates. We talked about family offices. And everything that was being said earlier is 100% correct. We're literally entering the second decade of venture capital investments here in the region. And we've already highlighted the challenge of liquidity as why people haven't necessarily been investing in the region as actively as family offices. And venture, I would challenge to what was said earlier, in the US probably started in the 1940s and 1950s. So the track record of all of that venture capital investment is 50, 60, 70, 80 years of investment. The red flag that we see from Southeast Asia is because of the lack of exits that have been happening in Southeast Asia, a demographic which is 15, 16 countries, large population if you aggregate them, different demographics, different regulatory environments, is that if they don't see the returns, government starts pulling back on that LP funding. And you need to have government interest in the sector for it to continue to flourish. And one of the biggest concerns we have is if they do not see the returns on those investments, will we see a shift towards pulling back LP funding until those returns comes? Hence the focus on IPOs, hence the focus on return on investments to be able to justify that. I do not believe, given the economic cycle, Saudi is actually only 5 years of venture investments. And if we're assuming we're bottoming out of the economic environment that we're in and that we're likely to see a pickup of macroeconomic activity in the next 2 to 3, 4 years, many of those exits will come when we potentially see a heyday happen again. But to see sustained venture investment in the region, that has to be coming from government focus on this space and the return of investments, because venture capital is not charity. It is an asset class. It is a private capital, illiquid asset class that needs to provide returns to the LPs. If we see that happening, I don't anticipate that we'll see a slowdown. And history has dictated in any market that we're cyclical, that even if we are seeing a slight downturn, we'll begin to see a pickup of investment activity in the years ahead. But one thing is a fact, is that technology is not going away. If COVID proved one thing, specifically here in the GCC, that it really revolutionized the operating models of individuals and the opportunities that present themselves and the inefficiencies that exist that can be created efficiently using technology. So as long as the use cases and the success stories drive further success, I do not anticipate that venture will be slowing down. It's just a matter of the rate of capital deployment as opposed to whether it's going to be depleted.
Latifa, in light of what Philip mentioned, how long do you think the government in Saudi Arabia will be actively investing in VC funds?
I think the involvement of the government is quite strategic. Even so, when SVC, for example, take SVC as an example, when SVC started, the coverage that they do to the fund or provide for the funds was almost at 50% or 40%. So you'd see funds that are 50% deployed or having, SVC money as the core LP in the fund, and then you have 50% covered from the market. That percentage now decrease. And in fact, if a fund is raising money or got to have money from SVC and JADA and others, so government money, that pool should not exceed a specific percentage that is no near matching the 50% that we used to see. So yes, there is a strategic allocation that has been done, and part of it is actually the sectoral focus. So in the news that you've seen and we've seen, you'd see more, especially on the second, third, fourth fund that we're seeing, you'd see that there is more sectoral focus in comparison to the fund that they had vintage year in 2018 or 19, etc., where deal flow was actually, quite agnostic. We could not distinguish where the money could be coming from or where the biggest opportunities are there. But now the deal flow is quite concentrated, and expertise are quite, I wouldn't say concentrated, but quite clear where you can pinpoint them out. And I think the allocation or the government, support is being done in that way. And in addition to that, and a huge sort of testament to that is the activity that SVC is having in the private equity pool. Right, so their investment in JADA, etc., for the 400 mil, and also if you look at JADA's client pool strategy, which I believe has a bit of a tech element and a bit of sort of lifestyle businesses and private equity businesses, which is similar to Turmeric eyeing the market, setting, shops in Bahrain and others, and GA being more active, investing in tech companies and beyond in the region. So I wouldn't say it's a direct pull, but more of signaling into specific sectors that the market should be aware of. And yesterday, NIDLIB, the program for the national development of minerals and industrial growth, have actually announced that the government is intending to invest around 100 mil into actually specific sectors within even NIDLIB as a an industrial sort of growth program. So I think it's more of a signaling to the market where private investors and where GPs should focus their expertise if they have that expertise, and where they should be sort of forking that opportunities and investing in that opportunities.
I was surprised that you framed the question that way, asking like how long will they keep investing in VC? Because in my point of view, like they are only warming up, like they haven't yet started. If we take a little bit like broader, like longer-term scale, on the historical perspective, like Adia, for example, has been only investing in venture capital since practically like 2001 in Silicon Valley and like elsewhere. Neither Adia nor Mubadala haven't really like for serious started investing locally, and that is yet to come. And they are not there yet, by the way. They decided to shift to the public markets and do this abroad a lot. But it all works in cycles, so I think they will renew the VC investment or allocation program in Adia, and I hope to see more focus on the local ecosystem, because I've seen the influx of funds registering in ADGM here in Abu Dhabi with the hope to actually raise locally, and their progress with that is typically speaking underwhelming. And I think that the sovereign wealth funds can play a better role in forming the local VC ecosystem by deploying capital into the venture capital firms that are coming to the region. Now, the long-term strategy would be to actually build a sustainable ecosystem that helps both the funds and the startups thrive locally. And that takes time, that takes thinking. It takes a change in culture, and I just don't think that GCC overall has matured in terms of that culture yet, because it's relatively quite a new asset class for the region. And again, I'm telling you, families are not used to venture investing and locking up capital for 10 years. It's yet to come, and I really hope and look forward to to seeing that happen. But it's just not happened yet. You may be thinking, oh, like this, here is 100 million here, 300 million there in terms of like the allocation to the venture fund, but the region hasn't started yet. Trust me.
Well, that's very optimistic, and I love that. I love that. The future is
yes,
holding more
so
surprises.
much work
Yes.
to do with that. That's why I don't I'm hesitant on like commenting on like global statistics, especially if it's inspiring and gives hope, because for you as a founder, and if founders are listening to this podcast, it shouldn't mean anything to them. They should still work hard and smart to get their startups to where they have to be, and not hope that, oh, like the 100 million fund deployment means that all of a sudden like my life will become easier. Not at all. Just keep working hard.
Even for founders, when they hear the news that there is more focus on seed stage or early stage investment, like 50%, as Philip mentioned, 50% of the money of the capital invested in the startups last year went into seed stage. This is encouraging for growth stage VCs to come maybe this year or next year to harvest all those seed stage investments when they become at the growth stage, or some of them who would succeed from them, hopefully.
It gets us back to like the liquidity events, and I think it's now on the governments, because who else will do this, to actually like build the whole journey for exits and make sure that ecosystem is actually complete on every stage of the fundraising up to the liquidity events such as IPOs.
I mean, look, government clearly has a role to play. And we go back to exactly what we said earlier. First 10 years of venture, this isn't going to happen overnight. In fact, this is the first economic downturn that the MENA region has seen in terms of venture capital. So if we have this conversation in 10 years' time, I mean, even to the point that you were speaking about, Ian, earlier, I think that investors and founders have short-term memories. The days of scale at all costs are going to come back at some point if we see a return to an economic boom, and that like people now are frugal, and that's why they say the best vintages are done in economic downturns, because founders have to learn how to make that money work. But maybe if we speak again in 10 years, we're back to scale at all costs, because that's the venture capital model. We talk about power law, we talk about the unicorns, the obsession with the 2-3 companies that are going to pay off all the other ones that are potentially going to fail. They're not going to come from sustainable, good growth businesses. They have to see this kind of acceleration. But the reality is that we kind of have to go through the economic cycle. VCs that are now raising second and third, you mentioned at the beginning, they have many first-time funds. Yeah, I mean, they're going to have to also go through the learning lessons of the second, the third, the fourth fund. I think we start seeing specialized funds. We see sector-specific funds. There's a lack of patient capital in terms of research and development, and government support in terms of deep tech and all of that as a challenge. And I always point to the fact that why is it that fintech ranks first every single year? I keep on saying, why aren't we seeing more sustainability tech? Why aren't we seeing more food sustainability tech? Why aren't we seeing security tech? The reality is, if you can't, and Ian said this, if you can't see the exit, why are you going to invest in that industry? And that just comes with maturity, return on investment. If these funds start seeing massive returns on their investment, they'll become a lot more risk-taking in the sectorial shift and the focus. And unfortunately, that just comes with patience. I mean, we can't make that all happen now. It's going to have to take time to come to fruition. But there are clearly opportunities for government support, private support that can help drive. And I do genuinely believe that there's a massive M&A opportunity right now, because success will breed success. You'll have that second-time founder. You'll have the investors that have got payoffs, and cross-geographical M&A between Southeast Asia and MENA, where there are companies that are probably doing identical things that can become much bigger companies if they can operate cross-geography and go for a potential IPO. You talked about Palo. I mean, the fact that they're looking at potential acquisitions in the UK point to the fact that it's not going to come necessarily just from the region. You have to look further afield to become a global startup, if not a non-regional startup. And I think if there's one thing that we've learned in the last 2 to 3 years, and this is very sad to say, but it's the fact and reality, the days of Kareem operating at scale across the whole MENA region with not necessarily a regard of unit economics, but scalability, have gone by. Companies are pulling out of the Levant because it may not make sense to operate in the Levant. They are not necessarily operating in Egypt based out of the UAE because it may not make sense to do so. The days of operating in Pakistan and Turkey become a little bit more questionable from an operating model perspective. So you start really thinking about what are the markets that you can cherry pick to enter to get to potential growth. And then we start seeing a new model that exists in the next decade of venture investments. But again, we need to go through that process before we start seeing what the success stories are.
Okay, very quickly before we end, if you can, for each one of the guests, tell us about an overlooked or an under the radar industry or sector that you think would be prominent in 2025. I know everyone is talking about AI and fintech. Is there anything else that's hidden, maybe from the numbers, Philip, or Latifa and Ian, from your early stage investments or angel or seed stage investments?
To me, AI is an enabler, and it can work across the industries. Web3 is an enabler. It can work in fintech. It's not an industry on its own. And sadly, because people think it is, and they are trying to make money out of it, it's just not where it could be if it had a broader adoption.
Okay, Latifa?
Yeah, I think just to second what Ian has mentioned, the bigger umbrella of the AI, given that we're not, the computing era has passed in a way, so it's becoming more of an augmented part of whatever you're building. And we're seeing a lot of funds and startups utilizing that, hopefully in the best way, or trying to figure out a way to do that. One area that we're looking at that's sort of emerging in a very interesting way is if you're looking at Saudi and MENA as a market in general, is yes, PropTech is one that is definitely booming, and in different means, be it through a bit of fintech element or in general. It's a market that the beauty of it extends the issue of it. And the beauty of it extends beyond MENA. There is sort of a global element part of it, but also we're looking at efficiencies in any D2C play. So I think what Kalo is doing and what Ahmad Rawi and his team is doing at Kalo is something absolutely brilliant. It's sort of that specific play and what are you doing to bridge the gap. And a third industry is InsurTech. And we think it's been an industry that has been delayed when it comes to disruption in the MENA region, just because of the complexities from a regulatory perspective, but also operating models perspective. But it's an industry that we're looking to see a breakthrough with them.
Awesome. Philip.
Just in terms of data, CB Insights reported as part of their annual report that 37% of all investment in the US or globally was in AI startups. We've gone through the methodology of their reports and other competitors' reports to understand how do you define that. Obviously, without going into all the details, you've got AI native, AI enabled, and then companies that just use an AI feature for their own kind of operations. We're currently working on aggregating all that data on MAGNiTT for the emerging market space, but preliminary data has basically highlighted that only 2% of all funding went to AI native companies last year here in the region. So you can only assume, given the global focus on this, that it is an area that will continue to grow. The problem is how many AI native companies are there? And if they're only receiving a seed or pre-seed investment round, then they'll need to get a seed round, then they'll need to get a Series A. And then that growth in actual investment in AI regional companies will continue to accelerate. So I do anticipate, not that it's under the radar, it's very much at the top of the radar, but that was something that will continue. I think that the wider deep tech, if there's again a learning lesson that we've seen from Southeast Asia, the next evolution from fintech came into deep tech. The reason that happens is it requires deep government patient capital for companies to be able to build and grow, whether that comes from universities, whether it comes from national government departments and policies. But for you to see growth in deep tech, it needs to be a government initiative for patient capital before VC start getting attracted into that industry. And I think that there is a growing interest in research and development projects, specifically in deep technology, for that to become a sector that is worth tracking and growing in the years ahead.
Ahmed, what's your prediction? Just to nail your colors to the mast, my friend.
Well, for me, in the VC industry itself, not about the sectors, I think secondaries are going to make a big wave in 2025 and 2026 because Philip, Latifa, Ian, you all talked about liquidity in the MENA region. I think the easiest way and the fastest way to create liquidity and to recycle wealth from the early investors and from early employees and founders is by providing a prominent secondaries market. I worked at Carta. I've seen all the work that Carta X has been doing, and then why they stopped it. And I have friends and secondaries funds and Forge Global, which is a big secondaries platform. I think there are drawbacks to some of the secondaries models, but we can avoid them by learning from what happened in other markets. And I think in the MENA region, things are ripe for secondaries transactions, not in the traditional secondaries marketplaces, because they don't control for price, they don't control for cap table integrity or shareholder composition. There are other ways, other solutions, and I'm seeing really innovative solutions and secondaries.
Yeah, and I think, just to add to that, Ahmed, I think Key Capital has been trying to do some work in there. And I think we're gonna hear some good news on that front, but absolutely spot on.
Great
Thank
team
you.
at Key Capital.
Key Capital, yeah. Key Capital. BaNasr Muftah, shout out to BaNasr Muftah. He's been working on secondaries for a long time. Well, with that, thank you so much, Ian, Latifa, and Philip, and of course, Jamie, for joining us today. This has been a great conversation. We learned a lot from you today, and we would love to have you join us again soon. And for those who are watching or listening, please stay tuned for our new segments, Who's Raising and Who's Hiring. In these segments, we feature amazing startups raising capital and exciting new job opportunities available for you today. Before we get into that, let me tell you about our second sponsor for this episode, MAGNiTT, a curated directory of startups and investors in the Middle East, featuring funding opportunities and success stories. If you're a founder, MAGNiTT is an amazing list of so many VCs, accelerators, and government programs. If you're an angel investor or a VC, here you can get a comprehensive list of hundreds of MENA startups, which you can filter by sector or stage. You can also add your startup or VC firm to the grid here. Now let's get back to who's raising and who's hiring. I want to sincerely thank all those founders who reached out to us to feature their startups. We were overwhelmed with the number of founders who contacted us. We could not add them all to this episode, but we promise to feature every single company that sends us a request in the next episode. So expect more amazing startups and more exciting job opportunities every week. It's important to mention here that Jamie and I do not judge startups here. Our goal is to help in building a more connected community. We do not filter, analyze, or evaluate the startups we feature here. We leave it to investors to meet with the founders and make their own decisions. And with that, let's start with Hamsa AI, which is raising a seed round and led by Auni Banna. Here's the website for Hamsa. It's basically an Arabic speaker AI voice agent. The core audio solutions they provide are speech to text, translation, and then text to speech. And of course, they have voice AI for conversations that is used for customer service. Here, you can find their LinkedIn page and their website. The second company we have is Musajjal. Musajjal is an AI-powered platform that simplifies the podcast production process with no need for equipment, editing tools, or publishing tools. It serves as an all-in-one platform for podcast production. They've already started generating revenues from more than 2,000 users or subscribers. They're raising a seed stage round, and it's led by Mohammed Lamouche, Noor Al-Badarin, and Sleman Awad. Next, we have Tweld. Tweld streamlines venture transactions in MENA, an end-to-end platform to help you build, raise, and transact efficiently and seamlessly. Tweld is raising a pre-seed round led by Hassan Zabi. Tweld is also hiring. They're hiring product marketing and product operations with previous experience in venture builders, VCs, or private equity firms. They're also hiring product engineers with deep technical skills. Next, we have Entrepreneurship Weekly, led by Mohammed Radi in Egypt, is raising a pre-seed round. And the company is basically an AI-powered knowledge engine for startups and businesses all over the globe. Next is Hangar Car. Hangar Car is the ultimate digital platform for car owners, connecting them to seamless maintenance, roadside assistance, and optimized garage services. They're raising a pre-seed round led by Laith Bidat. Next, we have Crescita AI. Crescita AI is an all-in-one software that helps freelancers and small businesses manage their day-to-day operations. Imagine a personal assistant and a financial accountant within one single platform. Crescita is raising a pre-seed round and is led by Corbin Wheat. Crescita is also hiring. They're hiring a part-time CFO who must be based in the MENA region. They're also hiring a part-time back-end developer and a full-time front-end developer. Finally, we have MFlex. MFlex is making car financing easier in Saudi Arabia. It's led by Alan Abbas, and they're hiring a remote senior software engineer. For all those startups and founders, you can reach out to them directly on LinkedIn or reach out to me, and I'm happy to connect you to them. If you want to apply to any of those jobs, please reach out to the companies directly on their LinkedIn pages. They check their LinkedIn page messages every day. Thank you so much for watching. See you all next week.